Hey everyone, welcome back. Today we're taking a deep dive into MicroCloud Hologram, Halo. They've been making waves with some seriously cool tech.
Yeah, their stuff sounds like something straight out of sci-fi. Holographic LiDAR, 3D digital twins. It's
Is that
pretty wild.
right? But here's the thing, and this is what makes it so interesting to me. They've got 183 patents, almost 1,700 copyrights, but they're on the verge of getting delisted from the Nasdaq. Doesn't really add up, does it?
Yeah, it's a head scratcher for sure. Makes you wonder what's going on behind the scenes.
Exactly. So we've got three articles we're going to dig into. Each one gives us a different piece of the puzzle. First up, tip ranks. They don't pull any punches, saying LOs spread themselves way too thin.
It's like they're trying to be everything to everyone. Self-driving cars, healthcare, you name it. Classic startup dilemma, really.
How so? You mean trying to do too much at once?
Exactly. You see this a lot with young companies, especially in tech. They get caught up in the excitement of innovation, but they forget about the most important thing.
Which is,
Making money. You can have all the groundbreaking tech in the world, but if you can't turn it into a profitable business, you're not going to survive.
and that definitely seems to be reflected in their stock price, right?
Yeah.
Tip rank says it's down over 99% in the past year.
Ouch. Yeah. Trading at 25 cents a share. That's rough. They even did a 1 for 20 reverse stock split recently, trying to pump up the price, avoid that delisting.
See, that sounds kind of desperate, doesn't it? Like, if a company has to resort to that, it doesn't exactly inspire confidence.
Right, exactly. Investors see a move like that, and it raises all sorts of red flags. Makes them question the whole operation.
And to make matters worse, TipBrains points out that Halo's financials are, well, not exactly rock solid. Their assets have grown, sure, but their liabilities are through the roof.
So they're digging themselves into a hole.
Seems like it. It makes you wonder, even with this amazing tech, can they actually afford to stay afloat?
$1 million question right there. Is it just a case of poor execution? Or is there something fundamentally flawed in their business model? Or maybe something even riskier about the technology itself that's got investors spicked? Let's see what the next article has to say. So this next article from Benzinga, well, it kind of throws some cold water on things. They talk about how Halo's short interest has gone through the roof, up by a wild 63.37%.
Okay, so for our listeners who aren't Wall Street wizards, break that down for us. What does that actually mean for a company like Halo?
Basically, it means a lot of investors are betting against them. They're betting that Halo's stock is going to keep going down and they're going to make money from it.
So, not a good sign.
Yeah.
But is it unusual? I mean, plenty of tech companies face skepticism in their early stages, right?
Yep, sure. But Halo's been around the block a few times. They haven't just sprung up overnight. This level of short interest suggests there's something more, deeper concerns about their long-term viability.
And then Zynga throws out some numbers to back that up, right? Something about millions of shares being sold short.
Yeah, a massive 5.82 million shares to be exact. It represents over 7% of the float, meaning the shares readily available for trading. And get this, based on current trading volume, it would take traders about a day to cover those positions.
Okay, walk me through that. What does that actually mean?
So say some unexpectedly good news comes out about Halo, maybe a big partnership or a sign that their tech is taking off. Suddenly, those short sellers are in a tight spot. They have to buy back those shares to cover their positions, and if there's a mad rush to buy, well...
The price shoots up.
Exactly, that's the short squeeze. Prices can go haywire, creating a kind of self-fulfilling prophecy.
So a risky gamble for those short sellers, but potentially a lifeline for Halo.
Right, but then Benzinga hits us with another reality check. They compare Halo's short interest to, the rest of the tech sector, and it ain't pretty.
You mean Halo's standing out, even among its peers?
Big time. Their short interest is way higher than the average tech company. It's like investors are saying, yeah, we're not sold on holograms right now, but holo, they're a whole other level of risky.
Ouch. So not just skepticism about the tech, but skepticism about Holo specifically, which kind of brings us back to that reverse stock split. Our last article, also from Benzinga, zooms in on that day, October 9th, when it all went down. So this reverse stock split sounds like it was a wild ride. Benzinga says Halo's stock actually went up in pre-market trading. You'd think investors would be running for the hills, but...
Yeah, it's counterintuitive, isn't it? But sometimes you get these traders looking for a quick score, trying to capitalize on the volatility.
So they're hoping to ride the wave, make a quick buck, and jump off before it crashes.
Exactly. But in this case, the wave crashed pretty hard, Benzinga says, when the opening bell rang. Bam. Stock tanked so fast they had to halt trading.
Whoa, seriously. Talk
Yeah.
about a reality check.
Right.
What happened when they finally resumed trading?
Well, it did rebound a little bit, but I think the damage was done. That reverse split, it's often seen as a last resort.
Yeah. And when even that doesn't work, it makes you wonder, even if Hallow can turn things around, gain some stability, what does it say about the long-term prospects of this tech? I mean, we're talking about holograms here. It's like something out of Star Wars.
Right, and that's what makes this whole thing so fascinating. Benzinga ends their article with a question a lot of investors are probably asking themselves, should I sell?
It's a tough call. And it highlights this bigger question, right? Like, how do you balance groundbreaking innovation with, you know, actual market realities? Can a company with such revolutionary ideas actually make it work, make it last?
It's the million-dollar question, and unfortunately, there's no easy answer. Too many factors at play, too much uncertainty.
Exactly. And while we've thrown around some possibilities, some what ifs, the truth is none of us have a crystal ball. Whether MicroCloud a hologram becomes the next big thing or just another cautionary tale, only time will tell.
That's the thrill of it all, though, isn't it? Trying to spot those winners early on, those companies that can truly change the game.
Absolutely. Well, that about wraps up our deep dive into the curious case of MicroCloud Hologram. Remember, this isn't financial advice, just a fascinating glimpse into a company walking a tightrope between innovation and, well, potential disaster. Until next time, stay curious out there.